Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple, Spotify, or Google, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. This content is brought to you by Uphold, which makes crypto investing easy. I've been using Uphold since 2017. They're one of my go-to exchanges, so I can vouch for it. You can buy, sell, trade, and earn cryptocurrencies in Uphold. They have 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. As with all exchanges, you can buy and sell on them, but I highly recommend you custody your own crypto, not your keys, not your coins. If you'd like to learn more, please visit the link in the description. All right, my friends, we got some big news today. First up is Binance, and it's not so good news. They tweeted out from February 8th, we will temporarily suspend all USD bank transfers. So Binance.com is halting all US dollar transfers, and whether it's in and out, right? Withdrawal or deposit, whatever it may be, they're halting all of it. Now, this does not apply to Binance US, and that has been confirmed. It's only for Binance.com. They said only a small portion of our users will be impacted by this, and we are working hard to restart the service as soon as possible. All other methods of buying and selling crypto remain unaffected. So once again, this is just US dollars. It doesn't apply to euros and other fiat currencies. However, it is a red flag, and we have to keep an eye on this. Hopefully they get it restored, and hopefully they're not getting blacklisted by different banks. That will be a big problem for Binance. Now, I want to make sure that I keep things holistic and fair here, because a lot of the transactions that happen on Binance.com are crypto related, meaning people are, moving in and out stable coins, not specifically fiat currency. So I think they're going to be okay, but it is a red flag and something we need to keep an eye on. And once again, it does not affect Binance US. If you are a Binance US customer, you are okay. But this is something, once again, I want to keep an eye on, and hopefully it doesn't escalate from here. It doesn't have any regulatory roots to it, where it's maybe some jurisdictions or banks in the US are saying, we're not going to do any work with Binance. We're not going to have them. We're not going to help them. We're not going to support them, right? That would be pretty bad. So let's keep an eye on this. Now, we got some good news that Genesis and Digital Currency Group have reached an initial agreement with main creditors. This is definitely good news, guys. It's welcome news, because this was a big collapse on the verge of happening with Genesis trading, right? We know the Gemini Earn customers have over $900 million, close to $1 billion stuck on Genesis. And it's been a public spat between the Winklevoss twins and Barry Silbert. The Winklevoss twins have sent open letters and criticized Digital Currency Group and Barry Silbert on Twitter. So it has not been looking good. And, we've been talking about, we don't want another collapse in the market, because that's going to drive the prices further down. It's going to be a bigger hole that we have to dig ourselves out of. And here are some details. So DCG Genesis creditors have been told to expect capital returns of 80%. Beyond that number depends on a convertible preferred equity note and realized liquidation prices based on DCG/Genesis assets. So there could be some sell pressure, right? That the folks at Genesis are going to have to liquidate maybe some of their grayscale trusts for different altcoins, maybe some Bitcoin, I don't know. And, to be able to return some of this capital. So we'll see what happens. They're saying it's 80%. It's not 100%, but I guess something is better than nothing. But I think we dodged a bullet here, my friends. It could have been much worse. They could have completely collapsed, and I could have seen that, this black hole that is Genesis start sucking in the gravitational pull against the other companies owned by Digital Currency Group. So some good news. Let's see what happens, how things progress. But I think we, like I said, dodged a bullet here. Now, some very, very big news and bullish news. Visa's head of crypto, Coy Sheffield, is pursuing more efficient stablecoin settlements on the payments network. And it looks like they're going to use Ethereum or USDC settlement payments on Ethereum. First, let me talk a bit about the layers here. First, a credit card company, right, that existed before crypto is building in the crypto market. They're using the tech. They recognize the disruption that's happening, and they're trying to adapt to that disruption. So is MasterCard, so is American Express. Make no mistake about it, they have to do this because disruption is at their door. So this is very bullish news that they are building and taking, a public blockchain like Ethereum, which many of you hold a native token Ether in your portfolio. I do. I stake Ether as well. So this is huge news. Here's the headline. Visa eyes high value USD settlement payments on Ethereum. The same way that we can convert between dollars and euros on a cross-border transaction, we should be able to convert between digital tokenized dollars and traditional dollars, Coy Sheffield said. Big statement here, my friends. I hope you don't miss how big this is. So here's a quote. We've been testing how to actually accept settlement payments from issuers in USDC starting on Ethereum and paying out in USDC on Ethereum. Coy Sheffield, head of crypto at Visa, said during the Starkwave Sessions 2023 event in Tel Aviv. He said, so these are large value settlement payments. Folks, this is the future. Tokenization on the blockchain, settlement, transactions, contracts, you name it, on the blockchain. And as mentioned, many of you hold the native tokens of these blockchains that these big companies are building on, whether it be Ethereum, Cardano, Algorand, the XRP ledger. This is why you have the opportunity of a lifetime. Never before have retail investors like you and I been able to front run many institutions and big players. You don't have to be an accredited investor. You don't have to be some big hedge fund to go get equity at some startup or company, right? You can simply buy the tokens, the native token of these blockchains on the open market. And you don't even have to put $1 million. There's not like a threshold. You could put $10 in Ethereum, $10 in XRP, $10 in Bitcoin, right? $10 in Cardano. That's game changing and a huge opportunity for all of us. He noted that the effort would clone foreign currency exchange executed on the cards or the card network's payment platform. Global settlement with digital assets and fiat currencies is an area in which Visa wants to build muscle memory, CoinGraph reported Sunday. The same way that we can convert between dollars and euros and or on a cross-border transaction, we should be able to convert between digital tokenized dollars and traditional dollars, he said. Visa didn't return Blockworks' request for a comment at press time, but huge news. I'm going to try to get Coy Sheffield on the podcast. He's obviously very busy doing some big things, but let me give you some more details here. Visa announced the use of USDC, a stablecoin backed by US dollar, to settle a transaction with the network over Ethereum in March of 2021. Here's a quote. We're seeing wallets and crypto native neobanks building payment products entirely with digital currency, and we want to meet these companies where they are. Sheffield told Blockworks at the time, the ability to make settlement payments to Visa in digital currencies could offer meaningful benefits and efficiencies, particularly for fintechs who run their business in crypto. Folks, the on and off ramps, the infrastructure is being built here. I hope you see what's happening. The biggest names in payments and in fintech are involved. Go research it yourself, right? Go look at what Visa's doing and American Express and MasterCard. Not only that, stock exchanges, NASDAQ and all these folks, the big banks, the big wealth managers, the Fidelities, the BlackRocks, they're all here building. And while many are scared of the price and the market's down and recession and blah, 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 same old story, just different cycles, right? It's all bull and bear, boom and bust. You have a run up, a correction. The correction offers buying opportunity at low valuations. You buy your dollar cost average, you hodl, but you have to be patient and you got to maybe wait a few years. And then the bull market comes back. We get higher prices and profits are made. Our high ROIs are made. And it's so simple, but the problem is human emotions and human psychology. People want herd mentality. They want Jim Cramer to tell them what to do on TV, right? They want to follow, oh yeah, the price is up. Now's the time to buy. No, that's not the time to buy. The time to buy is when the price is down. And going by facts and the fundamentals and the market cycles and not your emotions. That is so important. That's how I started making money in investing, whether it be the stock market or crypto. And you got to put your emotions to the side and you got to spend the time to research this, to learn it. And when I meet people and they ask me, oh, which crypto should I invest in? I say, first, I want you to take 10 to 15 hours to go research this. I want you to understand what it is and why it's different and why it's disruptive. Go research how the blockchain works before you go put any money into anything, and then come back and talk to me, and I'll tell you what I'm holding and what I'm doing. And I've said this to family members and friends, people, because I don't want them to just say, oh, Tony told me to go buy this and I bought it. No, you should understand what the hell you're investing in and why this technology is disruptive and why it's going to change the world. And we're seeing the validation here, folks. The big players, the incumbents, the big financial the gorillas in the room, they're putting their stake in the ground and they're building. Now, here's an interesting development with FTX. FTX asked politicians who received Bankman-Fried's donations to return money. The confidential letters escalate a fight over what could be $93 million in campaign contributions. So we're going to see, I should say the FTX folks are trying to do some clawbacks here. This is going to be very, very interesting, my friends, because there's so many levels to this. Obviously, Sam Bankman-Fried is a fraudster, a liar, a clown, right, to the 100th degree, and he needs to be in jail. That's one level. But not only that, he had the hubris to go around in DC and lie to these politicians and, to lie straight to their face while he was doing all this fraud, and he was trying to get the free pass on the SEC that would make FTX a monopoly. And his own fraudulent activity caught up to him, and CZ and these guys exposed it. And there's a lot of people in DC who are very angry and upset at Sam Bankman-Fried. They feel like he embarrassed them, right? This dude had it. He had the open door because of his political and campaign donations. He was walking around DC. He was meeting with Gary Gensler and the SEC and the CFTC. And of course, they failed to do their jobs. And he really screwed them over, right? And he screwed the industry over. But now to try to go get this money back, ooh, boy, that's going to be a tough one, guys, right? We know how money and politicians work and campaign donations. It's legal bribery, but that's the system. Let's see what happens here. This is going to be tough. And the more I think FTX pushes, and now Sam is out, right? So you have the new CEO. The more FTX pushes, that means more pain coming for Sam Bankman-Fried. They're going to drop the hammer on his ass, right? Because if they have to give this money back, that's going to be more pain for them. They're already insulted. They've already been embarrassed. Now it's like, give us back the millions of dollars. Your boy Sam is going to be in trouble, but rightfully so. He needs to be in jail. Now, there's many layers to this FTX situation. So Eleanor Toretto of Fox Business tweeted out, as we reported on Fox, longtime friend and colleague of Sam Bankman-Fried's uncle Jimmy is renowned lawyer David Boies. Boies is now representing FTX clients in a class action suit against his friend's nephew. And she said here, a tangled web. This is crazy, right? We'll see what happens. This thing is not over yet. It's gone a bit quiet, with the holidays happening and the start of the new year. And Sam has been trying to email people, trying to witness tamper, right? Trying to get them to be friends with him again and not throw him under the bus. But I think he's going to get exposed, especially once again, these campaign donations have to be returned. It's going to be really tough for Sam. Now, let's talk a bit about crypto investment and the inflows of capital, folks, because despite everything we've been talking about with FTX, the bear market, the collapses, capital is flowing back into companies and the companies that are building the infrastructure for the crypto market. So risk-off sentiment incoming, but crypto investment products aren't listening. Year-to-date inflows for crypto investment vehicles now total $230 million. That's just 1 month, my friends, right? January just ended. So we've been talking a bit about this on the podcast on a weekly basis of the companies that are raising capital. So digital investment products clocked their fourth straight week of inflows last week, with $76 million pouring into the asset class, according to data from CoinShares. Year-to-date inflows for crypto investment vehicles now total $230 million, highlighting a decisive change in investor sentiment. James Butterfield, head of research at CoinShares, wrote in a report released Monday, total investment assets under management in the crypto space have increased nearly 40% since the start of the year, according to Butterfield. Guys, that's bullish. Think about it. After all the things that happened last year and the Sam Bankman-Fried FTX debacle, you still have these big institutional players sending in capital because they know, once again, boom and bust, right? And despite the idiocy and fraudulent activity of the clown Sam Bankman-Fried, things will rebound. It's happened just look in many times. Just look at the dot-com bubble pop and how many companies went out of business, how many people were laid off, how many people got scammed. Look at the 2008 financial crisis, right? One could have said back then that, oh man, are we ever going to come out of this or recover from the 2008 financial crisis when you have the real estate mortgage industry involved, right? A big fundamental part of civilization, how homes, right? They bet on homes, they did all these fraudulent activities and nearly destroyed the entire economy. Obviously, one could argue the true economy got destroyed then, but things went back to normal, right? In a sense that the economy recovered and we kept moving and new companies were built and so forth. So it does take time, but we'll get there. And that's what these big players realize. Hey, look, the market's down right now. Valuations are down. Now's the time to enter because give it a couple more years and things will rebound. The Bitcoin halving will happen, the bull market. And guess what? Sam Bankman-Fried will be forgotten. It's just human nature. These things have happened outside of crypto and we move on, right? It's just are humans at the end of the day. So while this may still be fresh in our memories, it's not going to be fresh a year from now. Think about it. So Bitcoin was the most popular asset, making up 90% of total flows for the week as investors put $69 million into Bitcoin products. Ether, by contrast, which is up more than 35% since the start of the year, saw $700,000 in inflows last week. The moves come amid a busy week for macroeconomic news as traders took in U.S. jobs data, the Federal Reserve interest rate decision, and other central bank moves last week. The Fed's decision to opt for a 25 basis point increase calmed markets initially, but more hawkish remarks from the central bank head Chair Jerome Powell spooked investors. So, look, you're going to have these roller coaster rides with the Fed and so forth, but these guys who are investing have a macro outlook. They're not looking from the daily, hourly, weekly, monthly. They're looking yearly. So, guys, towards the end of the year, things are going to be better. The Fed will have stopped. And then they're going to go back to rate cuts and money printing. It's just a matter of time because the system, the economic system, the debt-based system that we live in, they need to keep printing money. They're going to raise the debt ceiling again, despite all the political show that goes on and people who are not well educated or researched on how money works and currency works will fall for the political narratives about this and that. But the fact of the matter is, this is how the U.S. economy runs and the fiat system runs. And it's not just the U.S., but other countries as well. They're going to keep printing. And that's the tale of as old as time. They debase the currency. And this is why hard cap cryptos and assets for the first time in history, some say, oh, gold is it has some rarity. Yes, but they keep finding more gold. And guess what? They're going to start mining for gold in space in 50 years. So it's like that is not hard capped, but don't get me wrong. It's a great store of value. It has been for a long time, but now you have math, you have algorithms, you have the blockchain, and you're going to have hard cap cryptos like Bitcoin, which, can't be inflated. And that's a big fundamental item that's great for the investing into an asset class, right? Because once again, it can be debased. Finally, Brazilian crypto company moves into European markets with new partnership. The firm will also be receiving a $15 million euro investment from Azimuth to assist in its expansion efforts. See what's happening here, folks? These companies, these investors, they're expanding. There's mergers and acquisitions. There's continued investment. And I hope you're not, once again, dismayed by what happened last year. It's all cycles, boom and bust. So Capitual, a multi-currency digital bank that offers cryptocurrencies in Brazil, has partnered with Azimuth to expand its services to various European countries and Mexico. The Brazilian company that offers fiat on-ramp services is the point of entry into its country for many sizable global cryptocurrency exchanges, including KuCoin, Huobi, and BitGet. But this latest partnership will finally allow the company to offer its services internationally. Here's a quote: "We want to replicate the product we have in Brazil in other countries, serving our partners in other jurisdictions as well." Guilherme Nunes, if I'm saying that right, chief executive of Capitual, told Valor Econômico, a news company based in Brazil, the idea is to become a center of blockchain technology in these markets, he added. Here's some details on the investment. Azimuth will also invest 15 million euros, which is about $16.1 million, into Capitual to assist with its expansion ambitions. The latest funding will bring Capitual's valuation to 302 million euros, edging it's closer to unicorn status in Brazil. The asset management firm has always had an interest in cryptocurrencies. In September 2021, it launched a $75 million venture fund with SBI Group and Signum to invest in early-stage startups working on decentralized finance, blockchain, and distributed ledger technology infrastructure projects. Folks, I hope you see what's happening. Crypto's global, expansion happening global, investments happening globally. And I'm here buying the dips, dollar cost averaging. I'm not investing my life savings. I have my savings in my bank account. I have my 401k and other retirement stuff. And I'm taking, excess cash and I'm investing it in these cryptos, buying where I can in the dips, right? Not buying into pumps or at the top of the market. But we are, of course, in the bottom zone, in the accumulation zone. And that's where I'm taking my position. I'm not telling you to go buy anything. I'm saying go do your research, understand what's happening. I'm just pointing in the right direction, showing you the facts of who's investing, who's building, and what's happening. And I'm very bullish. The bull market will return, guys. Next year is the Bitcoin halving. I think this year we could see some sort of rally from Bitcoin and altcoins, but not to new all-time highs, just to the retracement. And I will be taking some profits there. Some of those profits, in full transparency, I'll use to invest in other things, but I'll also reinvest into the crypto market, because after that retracement, you're going to have a correction and you're going to hit some lows again. And, I'll be accumulating into the halving of next year and getting ready for the next bull market. That is how I'm honestly looking at it. And I'm keeping an eye on what big companies like Visa, as we talked about today, are doing, and who else is entering the market. How much capital is flowing in, as I just shared with you guys. Which companies are expanding? What are they doing? Are they hiring? Are they building? Are they acquiring companies? What are they doing? That's what I'm paying attention to. So hope that's helpful. If you'd like to, continue to learn more, please subscribe. Please subscribe to my newsletter. Of course, you can find this podcast on all podcast sites, Spotify, Apple, Google, and so forth. Appreciate you guys listening and subscribing and your support, and I'll talk to you all later.